Eric Muathe with Muathe.com. Today we're going to be taking a look at what causes any market to crash, and I'm going to show you that it takes a couple of things. Number one, that the RSI moves to 3-year lows. We also see that the MACDs should make 3-year lows. But more importantly, for a market, any instrument, commodity, stock, or currency to crash, it needs to move its monthly RSI below 38.2. But the strongest moves come when you are seeing all-time lows on the RSI, all-time lows on the MACD, and more so if you see that the RSI moves below 38.2. So let's take a look at some examples. If we take a look at the period where the S&P 500 crashed in 2008 here, we can see that that coincides with the RSI breaking down below 38.2, also making 3-year lows on the monthly RSI. At the same time, we see that the MACDs were also breaking to 3-year lows. Here, you can also see that the move became accelerated when the MACDs made fresh lows, all-time lows, also 3-year lows here on the main MACD, and all-time lows on the MACD was the reason why the S&P 500 crashed in 2008, early 2009. We can also see that the period here during this drop corresponds with the market making a 3-year low on the S&P 500. So this is this period here. So 3-year lows is the reason for that, but the crash in 2008 because the RSI moved below and cracked below 38.2. If we take a look at the NASDAQ in 2008, we see this crash period which corresponds with the RSI on the monthly moving to 3-year plus lows. Also we see that the RSI moves below 38.2 for the first time in more than 3 years, and that is the reason why the market crashed in 2008. The MACDs were also moving to 3-year lows, as you can see, which is the other minimum requirement. 3-year lows move there, and also a move to 3-year lows here. So that's why the NASDAQ had a huge drop in 2008, early 2009. Take a look at this period here in 2002 for the Dow Jones, which was a huge drop for about 2-3 months, which corresponds with the RSI moving below 38.2 on the monthly RSI, and also we see that it made a 3-year low on the monthly RSI. That also corresponded with at least one of the MACDs moving to multi-year lows here in 2002 during that 2-3 month crash relatively on the Dow. And again, we are talking about this period here. If we take a look at the most recent absolute crash in the market, was here September, October of 2008. We see that is a period where markets make a multi-year, more than 3 years, RSI move. Also we see that the RSI moved below 38.2 for the first time in about 6 years, and this was the reason why the RSI gave a signal that the market would crash during this period here. At the same time, the MACDs were also making 3-year lows plus. So multi-year lows had already been seen on the MACD, so the warning signal was already there. There was another move to 3-year lows here, another move to 3-year lows here. So the crash was well telegraphed. We can see that the main MACD had already moved to 3-year lows at the time before the crash of 2008. The same thing can be observed with the Dow Transports 2008. Dow Transports crashed. Why? Because we see that the RSI was already trading at 3-year lows. We also see that the RSI moved below 38.2 sometime here, September, October of 2008. The MACDs were also at 3-year lows, if not at all-time lows. You can see here a move to all-time lows and also 3-year lows on the MACD for the Dow Transports there, and also was already trading at 3-year lows here at this point, and eventually it moved to all-time lows there, suggesting that the market was very weak. And as we know, the markets did respond by dropping significantly fast. When markets are dropping below 38.2, expect an accelerated move to the downside. Here we see the Canadian market in 2008 during this fantastic crash. Why was that the case? Is because we see that the RSI on the monthly had already moved to 3-year lows here. It cracked below 50, which led to another drop somewhere here, and subsequently would crash below 38.2 on that monthly RSI time frame. We take a look at the MACDs, and they did not disappoint, as we see that the MACDs also had made a move to 3-year lows and subsequently to all-time lows here. The main MACD had already made a 3-year break to 3-year lows there. So the Canadian market crashing in 2008 was based on the technical break of the monthly RSI and the monthly MACDs. Let's take a look at one example in Europe, and I'll show you two periods. There's this crash-like behavior here sometime in 2001, which corresponds with this break in the monthly RSI to 3-year lows, and also a move to 38.2 below that for the first time in about 9 or 10 years. So that was the technical reason why you had this massive plunge in the German market. You can see that the MACDs were also making 3-year lows at the time in 2001. So the MACDs were also playing their part there, that break, and also we can see that this break here. So the MACDs were also breaking down to 3-year lows plus. Now if we take a look at the crash in 2008, which was a worldwide phenomenon, we can see here massive plunge in prices. You can see that the monthly RSI moved to 3-year lows. There was also a break below 38.2 for the first time in many years. And the MACDs were also giving us the sell signal, which is the ultimate sell signal, by moving to 3-year lows initially here, and again there was another break to 3-year lows there. So the German market, as an example of how European markets were trading at the time, did meet those minimum requirements. Now let's take a look at the current market. We see that by way of the RSX, the ETF that tracks the Russian market, recently had what looks like a crash type situation here for about 2 months, and we can see that that makes a lot of sense because the monthly RSI moved to 3-year lows here in October of 2014. We see that the RSI also clipped below 38.2. We can also see that during that period, the MACDs were also trading at 3-year lows. So 3-year lows would be somewhere here. So that break to 3-year lows, and also the main MACD was already trading at 3-year lows, which corresponds very well with the RSI moving to 3-year lows right here. As you can see, all those make a lot of sense because we have breakdown in the MACDs and breakdown to 3-year lows in the monthly RSI also. And this phenomena is not only tied to general stock markets, it also applied and does apply to individual stock names. Take a look at Lumber Liquidators, LL, which is down substantially this month alone. It is down about 40%, and it's down way more than that over the last 2 months. So these last 2 months have really taken the stock down. Why is the stock seemingly crashing? And the reason is very simple. We see that it is moving to 3-year lows on its monthly RSI. We also see that the RSI is moving below 38.2 for the first time in many years. So this here makes a lot of sense because it is meeting one of our minimum requirements, which is that the RSI move to 3-year lows, and also this move below 38.2. We can also see that at this present time, MACDs were already trading at 3-year lows, and we see that the main MACD is just now also over the last 2 months moving to 3-year lows and also making a move below zero. So this also applies to individual stock names. One market that seems to be doing exactly this in the present market situation, this being the Mexican index, which is as of March 10th, 2015, is breaking below this monthly closing low. There. We can also see that this being a current 3-year monthly chart, we are looking at the possibility that this is going to crack below to 3-year lows on the monthly RSI. We are also looking at the possibility that this crack to 3-year lows would also bring the RSI below 38.2, which would lead to a crash in the Mexican market. And we can also see that as of right now, our MACDs are screaming loudly that this market is breaking down and could crash over the next couple of weeks and months, as the monthly MACD is moving below to 3-year lows. And we can also see that the main MACD has already broken to 3-year lows, which is very bearish, and the main MACD is also moving below zero for the first time in many years. So this is one of the markets worldwide that seems to be giving us the ultimate Muathe sell signal. It also has the possibility of giving a crash signal if the monthly RSI eventually moves below 38.2. Eric Muathe, good luck, peace, and blessings. Mwah. I am out. Woo!